Hello, ladies and gentlemen. Greg Michalowski from ForexLive.com. Today's date is September 16th, 2024. It's Monday. Hope you had a good weekend, but we have 5 more days ahead, and it's going to be an important one with the Fed meeting on Wednesday. Bank of England and Bank of Japan also meet this week. And at this time, I'm going to do the Kickstart video where I take a look at 3 of the major currency pairs, the euro versus US dollar, the dollar versus yen, and sterling versus US dollar from a technical perspective. So let's take a look at those charts and see what they're telling us. All right, let's take a look at the euro versus US dollar. Start with the hourly chart. Let's remember that the ECB did cut rates by 25 basis points at their last meeting, but what happened? The euro versus US dollar ended up moving higher. Why? Because they, pretty much said that the next meeting was probably off the table and that they would look further ahead and that the rates going forward would be data dependent, and that wasn't what the markets wanted to see. The focus was also turned back to the U.S., where the expectations of a 50 basis point cut to kick things off this week started to take hold, and that helped to strengthen the euro, weaken the U.S. dollar in the process. So in last week's trading, we moved above the 200 and 100-hour moving average, well, the 100 first and then the 200-hour moving average. And we started to move up toward this swing area where we had a nice little floor through here. You can see how that floor was developed. Floor, and then we broke that floor and it became a ceiling. It got a little volatile here. This is through the U.S. jobs report, not last week, but the prior week, and we moved up to this swing area in trading on Friday, and then backed off against that level. So that was good news for the sellers. But in trading here today, we've seen a steady march to the upside, and that move to the upside has moved to another swing area up through here. Where we had a number of different swing highs and swing lows, admittedly going back in this area again right through here, same period through here for the most part, before moving to the downside. We did move above that level. This is again that employment day spike, but then reestablished the area right here as a resistance before moving to the downside. So we're back up to this swing area here between 1.1131 and 1.1140, let's call it. If we get above that level, it open the door, and we'll start to look toward higher levels through, that we saw in the month of August. So be aware of that. But first things first, we have to get above the 1.1140 level. We could also find willing sellers against this level, just like we saw on Friday, pushing the price back down. And if we do see that, then this old resistance level becomes support at 1.1097 to 1.11042. So moving from step to step in the euro versus US dollar, doing its ABCs, but the bias remains more to the upside in this currency pair, testing resistance though. Let's take a look at the dollar versus yen. I start by looking at the daily chart. Why the daily chart? Because we're trading at the lowest level going back to this period right here. This is July of 2023. To get there, we fell below the December low. That December low came in at 1.4024. Let's call it 140.25. We also moved away from the 61.8% retracement of the move up from. I'll go back here from where it's up from. It's up, well, not far from this December 2022 low to the high price that we saw in the month of July. So falling below that level was also more bearish. And we moved down to, again, the new low going back to July of 2023. However, we've seen the price rebound, currently trading at 140.24, which is right around the low price that we saw going back to the December of last year. So, right below the 61.8%, 140.40. So guess what? We're going to need to get above the 140.40 level to probably give the buyers some hope that the low is in place, that this is an extreme, and that we have a potential to move back up toward the 141.67, which was the low price that we saw in the month of August. If we can get above that level, which is also near a low price right here, then that would give even the buyers even more hope that the low is in place. We will see. Now let's take a look at the hourly chart to see if there's any clues off of it. And as you can see, the price action did move above that 25 level in trading here today. In fact, in the last hourly bar, but we rotated back to the downside. So we're trading above and below that 140.25 level. And if we can get above that level and stay above that level, we'll look toward the other targets off the daily chart But this low right here at 140, 140, what is that? 140.70 would be a target to get to and through. I'll put this down to that level right here, right around 147.70. Get above that level, then look toward the 100-hour moving average at 141.58 is still something to aspire toward. The price did move above the 100-hour moving average in trading last week, both on Monday and on Thursday. I guess this is Tuesday and Thursday. But could not sustain momentum above that level before it started to run to the downside. So getting above that level would also be key for the dollar versus yen. Finally, let's take a look at the sterling versus US dollar. The Bank of England does meet on Thursday. They make the decision. Recall from the last meeting, they did cut rates by 25 basis points, but it was by the slimmest of margins, 5 to 4, and that doesn't bode well for this month's meeting with inflation expected to be released before that meeting, and the core inflation rate expected at 3.5%. That's not good. The regular CPI, the headline CPI, is expected to be at 2.2%, so that's okay. But it's at core inflation that has the Bank of England members scared that service inflation is just too high, and so that is with the combination of the U.S. Federal Reserve expecting now to potentially cut by 50 basis points, around 65.35, by the way, for the Fed, as the pound versus U.S. dollar moving to the upside. In the process, we moved away in trading here today from its 100 bar moving average of the 4-hour chart. Admittedly, on Friday, we went above and below that level as the market was trying to figure out what it wants to do. Well, it decided this morning in the Asian session what to do by just trending to the upside here. So that's more positive for this pair. I had earmarked this 131.78 level as a level of interest. Maybe if I put it in a more solid line here, you can kind of see why that level is of somewhat importance for me at least. It's really a combination of different things, but we had a nice little floor here. Trade above and below through here, and then try to use that level as resistance through here and here and here. And again, there are some little spikes above it. This was the employment data through here. So we're moved above that level. Watch the 131.78 level for potential support. On the top side, we'll look toward this swing area between 132.21 and 30 as next target on the top side for the pound versus US dollar. So there you have it. A look at the three major currency pairs. Kickstart your trading day on this Monday. Hoping you good fortune in trading not only today, but this week. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.